2.5 more weeks.
2.5 more weeks.
Mm.
Well, why don't we kind of start with just a little bio of you, Joe, and explain, tell the people, tell us where you came from and who you are and
Okay, sure.
how you found yourself here.
How I found myself here. Well, let's see. Depending on how far you want to go back.
Well, where are you from?
I grew up in Vermont on and off. My family's been here for 7 generations. But since my dad worked for the Air Force, I was born out of state, so not truly a Vermonter, I guess. And so grew up here for a period of time. My dad was transferred. Grew up sort of in New England, various Air Force base towns and cities.
Okay.
Went to Johnson State College. Graduated. Worked in Stowe for several years as a waitress. And I was I guess you'd call it a ski bum.
Well, that sounds pretty good.
And then I went to, decided I had to get a real job. Went to Boston and went to business school. And
Where was that?
went to BU.
Okay.
And then I worked at Solomon Brothers in Boston as a bond salesman.
Okay.
I was in Boston for a total of 8 years. Came back here and was looking for a job and was lucky enough to be approached by, well, actually, I think I answered an ad. I think there was an ad, and I went and was interviewed and was lucky enough to get the job.
Where was that?
At Vita. So that would have been
Okay.
1985.
Wow.
And then I worked as a loan officer here for 4 years. Then I went to the Agency of Commerce as the deputy secretary under Bill Schuldeis when he was secretary.
As we were talking about that, John and I were talking about that, because
Yeah.
we were trying to remember, since we've both been here since the 80s,
Right.
all the development secretaries and all the economic development commissioners
Oh, gosh.
we have known.
Yeah, exactly.
And we were trying to remember when Bill and Joe.
Oh, yeah.
You know, trying to piece it all together. We couldn't do it.
No, I
Couldn't
don't.
do it.
I don't think I could do it either. But
Mm.
you would actually.
So,
have
so how long
access.
were you there?
I was there for 5 years,
Okay.
and then I came back here as CEO
Okay.
in February of '97, and I've been here ever since.
Nice, nice. How about you, Cassie? Tell us. I think people are more familiar with Joe. They probably don't know you
Yeah.
as well.
Um,
Where are you from?
Well, I moved to Vermont from Connecticut, but I'm a military brat, so,
So you're both brats. Okay, that explains a lot,
Isn't
probably.
that funny? I didn't.
yeah. So I would say I mostly grew up in the Washington D.C., Northern
Okay.
Virginia area, but I lived, California, South America.
Oh, nice.
And knew that I always, was a New Englander at heart, and so went to college in New England and decided after that I wanted to stay in New England. And so I lived in Connecticut after college, and for a while it was great until had our first child, and we were living outside of New York City and decided that we really wanted to kind of have a better quality of life and move to what we considered vacation land, which was Vermont.
Where'd you go to college again?
In Massachusetts, Williams College,
Okay.
which is in northwestern
Yeah,
Massachusetts.
almost in Vermont.
Almost in Vermont, yeah.
Kind of Vermonty down there,
Yeah.
in fact. Yeah.
And so we moved here about 23 years ago.
Okay.
And haven't really looked back since. It's been great, although my husband still commutes down to Connecticut for his job. But,
Hmm.
yeah. So, and I worked for a bank when I first started here. It was Howard Bank at
Okay.
the time. and did that for several years until I had 2 kids. And then with my husband's job taking him out of town so much, I stepped out for about 7 years and just was a full-time mom. And then sort of got back into the workforce slowly, working part-time, again with folks that I had worked with in the banking sector. And I was working from my house part-time, and then part-time in the office, and then that led to full-time in the office, and did that for about 7 years, and then met Joe, and Joe hired me, and it's been at Vita now for 5.5 years.
You were doing the similar thing, sort of a loan officer kind of thing on that end of it?
At Vita?
Yeah.
Yes, when she first hired me, I was a commercial loan officer
Okay.
for a couple of years, and then Steve Greenfield, actually, before Steve
he
retired,
we moved you to.
I became Director of Operations, which was a new position, and I did that for a couple of years. And then Steve Greenfield retired, and I moved into his position as Chief Operating Officer, where I am now.
Well, we love Steve, as you know, and his wife Patty was in my son's
That's right, yes.
preschool.
Oh, I
And
heard this
she
story
was
too, yes,
wonderful,
at Steve's
yeah.
going away party, yeah.
Yeah, so this is, Vermont is such a small place, and you get to know people and stuff. But she was fabulous in that. I'm sure
Yeah.
They're both lovely.
Yeah, they're great. Yeah, and Steve has that great head of hair, which always kind of upsets
No,
me a
I
little bit.
know it. I'm like, Steve, you're getting more hair instead of less.
I know.
Something about working at Vita, because Tom Porter also has
That's
that.
right, he does have a nice hair.
You guys have any openings? Or anything like that? So, let me just, it occurred to me, you said Howard Bank, and then it merged and became Bank North. Was that then merged into Chittenden? Is that how that happened? No. What happened?
So
That
Howard
one?
Bank, before it was Bank North, I think there might have been like another bank. I want to say it was a People's, but not the People's
It was
United.
the People's from Maine.
Yes.
Okay.
And then it was maybe Bank North, and then TD.
Okay, so TD, because it's like, even though I've lived through all this stuff and reported on it, it's like, which one was
Oh,
that
God,
one
yeah,
again?
I
And
know.
then,
Yeah.
of course,
Absolutely.
Peoples came from Connecticut and
Right.
bought Chittenden, and we thought that was just, they were just gonna flip it.
Yeah.
We thought that was gonna happen, and I think that might have been their strategy,
I
and
think
then,
it has been too.
and then,
Yeah.
of course, the
Yeah.
banking industry the mergers just came to a crashing halt.
Yeah.
And then it's like, oh, well, we have this huge asset now, and then they've kind of grown it from there. But
Yeah.
so why don't you explain exactly how Vita works, and where you get your money,
Sure.
who you're looking for, what your target audience is, and the role it plays in the financial world here in Vermont, which is pretty significant.
I'll do some and you do some.
Sure.
Okay. Well, Vita is not a state agency, which I think you know. It's an authority, and it's called, statutorily, it's a public instrumentality. So VSAC, VHFA, they're all public instrumentalities. So you're not an agency, but you're not private, obviously. So you're this quasi, often called the quasi-public. When I got here in '97, we were in a difficult spot in raising money because we'd borrowed money from the state. At that point in time, they said, we really, our budget is such that we really can't fund you anymore. And so we came up with an idea of essentially securitizing our portfolio. The way we did it was very interesting. But that's essentially what we did, and borrowed money against our portfolio. And then we took some of that cash that we got and we made a reserve fund against, for a commercial paper program. So that meant that we could issue our own short-term bonds, backed by this cash reserve and the state's moral obligation. So we started out at, this probably was in 99 maybe. I think we started out with 40 million in moral obligation. And that's how we funded ourselves, issuing commercial paper, and getting more moral obligation when we needed. We've also, in the last few years, started to borrow from banks. Primarily, one of our large funders is CoBank, which is a big agricultural lender. We borrow from a couple of Vermont banks as well. So that's where we get our funding. There have been times when the state has wanted us to do something, and so they have given us some money for either reserves or buying down our interest rates. But as far as our lending funds, we do raise them ourselves.
Is the bank thing because the interest rates are so low now, or is it just a different strategy?
Well, we can also borrow different, commercial paper can only go out 270 days, so you're rolling it all the time, so you have to match your assets and liabilities. So we're doing a lot of variable rate lending. With a bank loan, we can borrow longer and then match our portfolio and do longer fixed rate lending.
Okay.
You wanna
So that's
something?
pretty complicated stuff what you're doing there, and you do all the economic piece here and all those, where you're figuring all that out.
Well,
in
JP
house.
Morgan issues our commercial paper,
Okay.
so they sell it, in other
Okay.
words, which is what I did at Solomon Brothers, essentially. So I'm fairly familiar with the markets, although they've certainly changed. But yeah, they sell our paper generally to institutional investors. I think a lot of insurance companies,
Okay.
roll it over.
That's funny. Yeah.
So yeah, it's been a very good strategy for us. It's worked.
So that's our like capital structure. So that's where we get our money to then lend out to people that apply to us, or businesses that apply to us to borrow for their capital needs. And so on the other side of that equation would be the applicants, and that's where the mission part of VITA comes in. So we provide the money, if you will, to finance borrowers that create jobs and support the economic vitality of Vermont. So it's eligible businesses that create jobs, and then you've got the whole agricultural sector as well. So those are the two primary sectors that VITA serves. Our bread and butter is really the small businesses, because that's generally, Vermont. There aren't a lot of, Fortune 500 companies here.
Yeah. Is it the same sort of definition the SBA would use? Because that covers
Yes.
about 99.9% of all the businesses
Yeah,
in Vermont.
in some cases we use that depending on if it's an SBA program, but.
Right.
Okay, so what is sort of your definition of a small business then within your realm?
You
Well,
want to talk about small business program and then the other?
yeah. I mean, small
I'm just wondering
business,
about eligibility and who your target audience is.
Yeah. So eligibility isn't based on like the size of the company. For us, it's really the size of the loan, because part of our mission, if you will, is to leverage private money as well.
Okay.
So we come in as the subordinate lender.
Okay.
And especially on the commercial side, there's private money involved. Banks, credit unions, other, the Vermont Community Loan Fund, other institutions come in. Generally, it's like a bank or a credit union that would be the senior debt, and we're the subordinate lender. So it could be, by Vermont definitions, a large company, a large business, but by, say, like SBA standards, it's still like a small business if it's by revenues.
Yeah.
Now we also have, We do industrial revenue bonds. Those are generally for larger businesses, but that's not something that we fund directly. We're a conduit issuer, so it's an off-balance sheet program. We do the underwriting, and there's generally a third party who buys the bond, like a bank generally. So that is, like a Wake Robin or a Dealer.com or a Green, what is it called now, a Keurig, or some of those companies might be in that program. But our bread and butter really is the small businesses, and we crank out those loans. And it's so with our small business loan program, by definition, it's loans up to $500,000. And then we have we call it our direct loan program, or our sub 5 by statute. It's under the subchapter 5 program. It's loans up to 1.5 million. It could be up to 2 million if there's an energy component to it. And that's all on the commercial side of the house. I haven't even talked about the agricultural lending, which is really quite different. There we don't necessarily have another bank involved. It's a different type of mission, if you will. It's really to support the agricultural economy, and a lot of that is due to the fact that there aren't a lot of lenders that are willing and able to support the ag economy. It's a different set of risks.
Does that some of it come from our friends in the state who are interested in supporting the agricultural economy? Are they encouraging you to do that, or is that just part of your general mission?
Well, we started in '88. We were first given an ag program when the ag economy was in real trouble. And that was really a refinancing program to help them refinance their debts. We still do some of that, but we've really morphed into a large agricultural lender. And I think most people are supportive. I don't know. It's, as Cassie said, right now it's a whole different risk profile. We work through those loans with folks for a lot longer period of time sometimes. But in the end, our loss rate in that is under 50 basis points. It's amazing.
It's a big part of the economy. It's a very interesting part of the Vermont fabric. And when you think of economic development, you don't really think about farming so much, but you have to think about the indirect impact that it has. And, it depends. Some people are very passionate about the Vermont landscape and farming being really part of our roots and our identity here, and the small farm being part of Vermont. And others think about, well, that's part of the water pollution problem, and how long do we keep subsidizing farmers? And it's a very controversial. It can be very controversial. Our role really is to be there to support these farmers that are viable if they can stay in the business. If they can't, help them, so that the whole industry doesn't just come to a halt, and have this all come crashing down in a very short period of time, where the asset values just kind of, and the farmers have no backup plan and no option to.
So we do help a lot with them trying to figure out, what they should do. Is it time for them to go out? Obviously, we have to be careful with the lender liability piece of that. But, yeah, we have, I think, 6 ag lenders, and it's amazing how close they really get to to their farm customers. You know,
Mhm.
it's a totally different. You go in, you sit down at the kitchen table, you go over the finances, and
Sort of old school.
yeah, very much
Banking
so,
kinda.
very
Yeah.
much so.
Yeah.
And there just aren't many lenders that do it.
Right. The other thing I wanted to say was, when I first came here, I think the ag portfolio was, when we first started, not when I first came back, it was 92% dairy. And now it's probably 60% dairy with some
Really? Okay.
diversification and vegetables and maple and,
Yeah.
you know, cheese. So there's been a good diversification out of dairy.
Yeah.
And I guess we'll see what happens with him.
Well, yeah, who knows? That's going to be very competitive, though. So amongst many states, you know,
I know.
Massachusetts, as you know, is the biggest ag state. New England already, and Vermont is by far second. So then there's a big gap. But
Don't we produce the most milk, though? I think Vermont produces the most milk.
oh, by far, yeah. No, and that's the thing, is that the dairy revenues are still a very, very high percentage of the
Indeed.
total
Right.
agricultural
Yeah.
revenues, and so it's a big business.
Yeah. And getting bigger,
And
more farmers
supports,
just,
you know, St. Albans
consolidate.
Co-op and Cabot
yeah.
and Ben and Jerry's, you know, has the plant just around the corner from St. Albans Co-op. And I think people look at it just cows in a field, but it's
Yeah, they don't know, they
Look at-
don't really think about the real industry that's there and all the people that
Mm-hmm.
are really working at.
now. I'm just gonna guess, and you guys can do it around that the ag program is pretty low margin for you, but maybe you're talking about the when you're involved with, say, Keurig or someone else, that's sort of a higher margin piece for you. Is that how? I mean, every business has, you know, this is our go-to, this is our the bulk of our business, but we make really high margin on something else. I mean, I assume that you have this built into
It's
Vita.
there, but certainly we can't do one thing because it's a high margin product at the expense of offering everything and making sure that we give each customer, you know, what they need, the program that they need. But you're absolutely right. Revenue bonds, we get a nice fee on those. Ag lending, one of the things that we did get, and I guess we're out of it now, that federal money is pretty much all gone. But back in 2008 or 2009, just after the debacle, there was a federal program that gave money to states for lending, essentially. And what we did with ours was we didn't use it to just lend out. We used it to buy down the interest rates, because we had a source of capital. So we used it to buy down the interest rates, and it lasted a really long time. I think there's still just a tiny bit of it left. So we were then able to offer lower rates, but we were still able to keep most of our margin. Now, as time goes on here and interest rates go up, our margins, just like a bank's margins, are going to be squeezed, have been squeezed.
Some of what SBA does, for instance, is they are really, really helpful when the economy is in bad shape. You know, they're there, and that's kind of what their mission is to be there. You know, if things are going great guns, and the commercial banks will take over and stuff like that. Do you see yourselves in that kind of role, or how do you distinguish yourself from a regular commercial bank? You know, why would someone lend at Vita instead of going to a regular commercial bank? Or even the credit unions are starting to get into commercial loans too.
Yeah, I want to say one thing, and then I'll let you. One of the things that people think of us as, which we are not, is a lender of last resort, because we just can't be. I mean, we have to have some good credits, because we do take risk as well. So we need a balanced portfolio. So all the times in our large program, we partner with the banks. So, you know, we don't compete with them. We don't go after their customers. We don't call their customers. But a lot of their customers have already dealt with us. Or we'll go to the bank and say, I hear Vita's got some low rates. Let's take a look at that. So
the other thing that banks look to us to help them with is the types of projects that they might not be able to do without additional support. Say if it's a high-risk type of industry or type of borrower or type of property. For
Or if the
instance,
loan to value isn't what they need it to be,
you
the
know,
collateral is.
banks have all kinds of policies about what they'll lend against if it's a startup or a hotel or a restaurant or this or that. And oftentimes the borrower doesn't have enough equity to meet that requirement, so they'll call in VITA to sort of boost that and come in underneath. And that's where we can play a really good role. So it's not just during, as Joe says, we're not the lender of last resort, and we're not necessarily the counter-cyclical lender, although I think maybe there is a little bit of that. We've tried to look at it. We haven't really
I know,
seen
it's
it.
unclear.
You
It's
know?
unclear. We've looked at the statistics, and it doesn't really look like, I would think, as you would, that we'd be busier when the economy is not so good. It's not necessarily the case. We're kind of just chugging along all the time.
How about interest rates? Does that make a difference? That the banks for
It does
for a
make
long
difference.
time were struggling against, the margins were so low. I mean, you can't borrow it, you can't lend money at zero.
Right.
So,
Yeah.
do they, in those kind of situations, do they look to you to help sort of spread the wealth and spread the risk and?
Well, they can all, if we generally have, lower rates, so they can combine our rate with theirs and get a lower rate. So it behooves them to bring us in, but for the interest rate as well, so their borrower can have a better interest rate.
Were you involved at all in the Brooks House down in Brattleboro?
Mm-hmm.
That was, the DRM lawyer was explaining to me how they put that together. It's like, yeah, I don't understand any of that. I think Mascoma was the
Yeah.
lead commercial bank on that, but if you were involved and they had the tax
make
credit
it
thing,
so-
it's like, holy smokes.
Yeah, they're complicated projects, and we've done several of them.
Yeah.
A lot of downtown revitalization. Tom
Yeah.
did a thing at one point on how many we'd done, and I was like, wow, that's great.
Yeah.
So you help a lot on these sort of maybe more complicated or projects that have sort of a public interest. I mean, that was very
Sure.
important to Brattleboro that
Absolutely.
they fix that. I mean,
And we did St. Albans, we did some stuff up there, there were tax credits. We're looking at Bennington, when they're just putting
Okay.
that one together.
Yeah. Are you part of the Putnam
We are,
Hotel
yeah.
thing? Yeah. Okay. Yeah, that's another very complicated project. That was a little kind of, is it going to come together or not? But apparently it looks like it has.
We hope so, yeah. It does look better than it did.
Katie lives in St. Albans, and that is,
Doesn't it look great?
they're
the town-
downtown.
I'm so impressed with it,
Better. I
actually.
know. I went up the other day. Well, not the other day. We went up for something and we stopped for lunch, and it was just really, the town is so different than it was
Yeah.
like 5 years ago even. It looks so cool.
Yeah,
Yeah.
they've done a really nice
Yeah.
job. It's amazing how just streetscape, light, everything just makes
Painting the
it.
sidewalk,
Yeah.
having a
It looks,
Parking garage.
Yeah, it looks great.
Makes a
Yeah,
big difference.
that seems like a great success story there.
Yeah.
So
There were
you're
a lot of moving parts in that one.
yeah, well, yeah,
Yeah,
that's I mean the complication. How do you deal with? I mean, you're dealing with a lot of different institutions. How do you bring a complicated project together just on the administrative level? How does that? I mean, does it take just tremendously long time, or do you have it down now that you can bring these things together?
Go ahead,
Well, it
Miss
does
Operations.
It does take a long time. I mean, this one in Bennington, it's been ongoing for over, well, I mean, before we were brought in even, probably several years. But and since we've been brought in, it's been on the pipeline now for well over a year. So they're not easy, and we're only going to be, a small piece of that whole. There are many layers of it. But you've got, different people who represent different components, and everybody's working together between the
Mhm.
lawyers, the developers, the different people coming in with the buckets of money. So,
Lots of conference calls with lots of lawyers.
yeah, yeah, a lot of fees going into this thing, you know,
Mhm.
so, this being, you know, new market tax credits now have been around for a little bit, and the people involved have done them before, so there's some, you know, knowledge there that's, you know, it's not reinventing the wheel, but so to speak. But each one is different and each one is new, and
And we have, our lenders have gotten really up to speed on them. They really, they have to draw me a picture each time too, don't feel bad. You know, this is where the money goes here, and it goes here, and they're really excellent at it.
So why do they want you folks involved, even though you might not have a huge stake in it? Why do they want you involved, VITA involved?
$1.5 billion.
Yeah.
You know, some of these projects just are looking everywhere for, you know, what they can come up with. And I mean, it is a small piece, but it's a significant piece that if they couldn't get it, you know, they'd have to get it somewhere else.
Is it, does VITA lend up to the other, you know, financial entities? Does it give them sort of confidence, oh, VITA's involved now? Is that part of the,
I think partly, yeah.
what you
the
bring
piece
to the
that we
table?
play, you know, we're taking a certain type of risk that the banks, the commercial banks, aren't willing
Yeah, there's
necessarily to
just that
take,
end piece maybe.
because they don't actually have a
Before equity.
direct attachment to a piece of real estate. Was we're taking a slightly higher risk, which is generally what we're doing. But it's, you know, a calculated risk on our part, and that's why we take a smaller slice of the pie.
Is that part of your mission though? Is that, I mean, you have these community projects, you're sticking your neck out a little bit farther than a bank might want to, or even could, or some of these other.
Yeah, I think I always say, and Cassie may think the same thing once she gets, and maybe already do. The difficulty, or the I won't say difficulty, but being at VITA, the thing you really have to look at in each project is the prudent lending versus the economic development, right? Because you need to do both. You need to be a prudent lender and not piss away money. But you also need to think about your economic development mission, and sometimes those are almost at odds, but you find a way to make it work, and each project is different. So that's how I have always thought of trying to look at both sides of the equation and figure out, how is this really important enough to take a little more risk? Often yes.
How about looking around the, I mean, there seems like very much as this community aspect to it, and looking around the state, in Brattleboro and Bennington and St. Albans, really interested in, you know, there's this mission of increasing the downtowns, which every governor has been, you know, wants to do, right? And there's very much interest in that. And clearly it's worked in St. Albans. And, you know, Governor Shumlin has been pushing the Bennington project and of course Governor Scott as well. And that's been slower.
It's been harder to put together for
put
whatever
together.
reason. I
But
think
are you,
it's
is
larger.
that part of the mission too, is to look at sort of, I mean, you can't ignore sort of the low-hanging fruit, maybe, that the projects that are going to be really, you know, are going to be successful.
Right.
Is that part of what you feel the mission is? Or is it strictly you looking at financially?
Oh, no, definitely part of the mission. I mean, definitely. I mean, again, it's a dual mission. Not a dual mission, but your mission is economic development, but you have to do that with an eye toward financial stability at the same time. But yeah, our mission is job creation, expanding the economy in Vermont. It's not. It used to be much more narrow, and they have expanded the applicants, you know, the applicant pool in terms of different industries. We just got into energy a couple years ago, and we have, what, about 40 million in energy right now?
Yeah.
There, it says here 34.7 as of December 2018. Is that?
35.
close. That wasn't bad for gas. I think there is some more now, but not sure there's 40. But
Oh yeah, no doubt. Yeah, is this some of the big solar projects? Is that
Indeed.
sort of
Yeah.
the
Mostly, yeah.
yeah? Now, how's that working out?
Very
Have
well.
those been good projects? Yeah.
Yeah.
They're based on contracts,
Yeah.
so they're pretty stable.
I know on the investment banking side, because of the interest in especially solar and the renewable energy side, they actually don't need as high a margins because people are willing to, because they want to do these kind of
Right.
projects, so they're not looking necessarily for the bottom line.
Yeah, and it's also risk, when you have a contract that
Yeah.
is making sure you get paid,
Yeah.
it's not the kind of project where you can really ask for a large
Mhm.
margin or a really high interest rate, because the risk is such that it lends itself to.
I noticed also, looking at the data, that more or less half your loans, maybe a bit more than half, are in agriculture, but it's a lower dollar number. Is that sort of the typical? It's sort of smaller
Yes.
pieces.
Yes, they are smaller loans oftentimes.
Is there when you're looking at say an ag loan, is there something you're looking for? You're looking at, well, what's the asset and all that kind of stuff, or what's the cash flow, what's the debt? Is it just sort of a typical? You're looking at, is it typical in any loan you might make, or are you
Well,
willing
there's
to look at
I'll
sort
let
of
you
lower?
I'll let you do it, Cassie, because
I mean, it's,
she's.
for any loan, there's the 5 C's of credit, but you're looking at the sources of repayment, basically, which is going to be the cash flow is your first source of repayment, and your collateral is usually your secondary source of repayment. Now, having said that, with what's going on in the dairy economy, oftentimes the cash flow is very weak, and it might not show that there's enough cash flow to repay those loans, because what's going on right now is it's costing the dairy farmers more to produce their milk than they're getting for their milk, because the prices have been so low. They're starting to creep back up, which is good. Whether or not that will be sustainable, I don't know. But so what Joe said earlier about losses in that portfolio, that's key, because that second source of repayment is the collateral. And the reason that we haven't had a lot of losses is because we look very hard at what that second source of repayment is. And it's their farm, the real estate, the cows, the machinery and equipment, and you're lending a certain percentage against that. So as long as we're doing our underwriting properly, and we're not lending more than that's worth in any kind of foreclosure, we'll get the money back. But that's not generally what we're doing either. We're not foreclosing. We're not like the banks, where they're regulated by the FDIC, and if they have a loan that's 90 days past due, they have to take certain actions. We don't have to do that because we're not in that regulated space, so we can work with them a whole lot longer. So if we think that they can present a plan and that they will at some point be able to turn things around or get out of it, we'll work with them. So that's why, as Joe said, the losses haven't been bad at all.
The banks complain a lot about the regulation, as you know. But what kind of regulation do you have, if any? I mean, there must be some.
Well, we are regulated. I mean, we are a creature of statute, so the state could. We are audited by the state auditor. We have our own audit firm, which is KPMG,
Mhm.
that comes in every year. For the programs that we have that use federal money, they come in and audit us.
Mhm.
So FSA, RD, SBA. But we don't have any federal regulation per se.
Have you been impacted at all by the federal regulations on the banks? You know, the small banks, especially the community banks, are in this tight spot where they're being regulated like a big Wall Street bank, and they've obviously complained about that for a long time. And I don't know why Congress hasn't changed that. I don't understand why they haven't, but they haven't. Is that squeezed you on your side on the ability to you know, partner with the banks at all?
I don't think so.
You haven't felt
I don't
that?
think
Okay.
so, no.
Okay.
No.
Because they're so concerned about, you know, the interest rates
Oh,
low
right,
and all
yeah,
that,
yeah.
and you know they're having trouble, and now the credit unions are getting into smaller commercial loans
Right.
because they have,
Right.
you know, they're sort of easier on that. Have you worked with credit unions at all?
Mhm.
Yeah.
We are agnostic when it comes
Okay.
to
All right.
partnerships.
So tell me, I'm going to ask you about a couple of projects that have failed. Can you talk about exact company?
Some of it. Depends on
Um,
which one, and let's see what.
And then, but I also want to talk about some success stories
Sure,
so that
that's
people will
fine.
know.
I
But
understand.
the couple I was thinking of was E Corp down in Rutland
Oh.
and Nordic Farm,
Okay.
which was in the big headlines. Can you
Yeah,
talk
yeah.
about those and what the process and then the impact on Vita
Mm-hmm.
exactly too?
I have to be careful because I don't think E Corp is anymore in the legal. Not sure about Nordic Forum, but as far as E Corp, that was a woman who came in and convinced not only us but the entire economic development contingent in the state that she.
Oh, everyone was very excited
Oh,
about it. Yeah,
we were
down
all-
in Rutland, it was like
We were
Yeah.
all. It was Middlebury, wasn't it? I think it was Middlebury.
Oh,
It was
Middlebury, okay.
Sorry,
Okay.
because the reason I know was well, anyway. So obviously there was a big to do, and everyone was very excited, and did not pan out. Now, did it? There was some question about her veracity. And the question really was it her veracity or just the fact that she wasn't a good manager? But yeah, I can't remember what we lost on that, but we did lose something. I could look it up for you.
I think it was like $450,000.
No, it wasn't that much.
No, it
I'll
wasn't
look
that
it
much.
up.
Okay.
No, I'll look
That
it
was
up,
the
but
news
I'm
report
curious.
I read. Anyway.
No, because we wouldn't have even. Let me look it up just
Okay.
before I.
All right, you can just email me
Yeah,
that or
okay.
something like that.
I
but-
don't have one. Yeah.
So some of these economic development. I mean, you've been in the state too, so there's always an element of wishful thinking, right?
Yeah.
And some of it works out, sometimes it doesn't. You know?
But it's not like we didn't look at all the numbers
Yeah,
and
sure.
do what we thought was a really good job underwriting and
Yeah.
doing our due diligence. But
Was this a technology loan?
It was a
I
tech.
don't know if it was a technology company. I don't know if it was in the technology program. I think it might have just been in the regular program, which would indicate that maybe it may have been larger.
That's a few years ago. Yeah.
Yeah.
And how about Nordic Farm, which everybody knows about
Right.
the Hinsdales and everything, and that farm, which is so distinctive.
I know, it's a beautiful farm.
Yeah.
Beautiful piece of property. There were just a series of, well, at least two, I think, families that leased the farm that were not good managers for whatever reason. I think there was a lot of deferred maintenance on some of the equipment. I don't remember all the details. Maybe you remember more than I do, but it.
Yeah. I mean, that's basically it, yeah. The cows were not being cared for, and deferred maintenance, and basically the farm was abandoned.
Yeah, I can get you what we lost on that because Petey will remember it.
Okay.
It was unfortunate because it was such a state-of-the-art facility at the time with the robotic milkers and.
Yeah. Are you finding that is there a lot of robotic milking in the state?
I wouldn't say a lot. There's some. I mean, you have to know what you're getting into because they're expensive. Some people say that they are cost effective. You have to keep them up.
Mm-hmm.
I've heard both sides where
Mm-hmm.
they do save money and they are worth it, and the other side is, they're more expensive, and so, I don't know.
Yeah, there's
enough
two
about it.
farms in Richmond, right by the bridge there, and I believe the one is very automated, and the other one is more traditional. It's like, and
Yeah.
I don't know anything about it, but I drive by there quite a bit,
Yeah,
and so they have sort of side by side two different ways of doing it.
yeah. Well, it's kind of cool because the cows basically walk into the parlor when they're ready to be milked, and then
Yeah. Yeah, the volumes are increased and the labor is decreased.
Yeah.
Expensive though.
Yeah, very expensive. Yeah.
Petey's gonna get me. He didn't remember. He said, I gotta look it up. I'm like, oh my god. Because I was big around here too.
Right. I remember we didn't do too badly on that one.
No, I don't think we did. I think we somehow negotiated ourselves.
Yeah.
At the end of the day, but
Out of
you
that.
have. So, what is the impact on Vita when inevitably businesses are going to fail? I mean, it doesn't. You can work the numbers. You can stay up and all night working that number. It looks good. It doesn't work out. So, what is the impact on Vita when a project of
Well, we have a significant equity position,
yeah.
so we're strong. We're quite strong financially, so
Mhm.
we can stand to take some losses. If we had a $4 or $5 million loss, but
We reserve,
Yeah.
like a bank.
yeah,
Yeah,
All
I was going to ask you. That was my
Yeah.
next question. Is
Yeah.
you
So
build
we do-
in the reserves into
Yeah.
the
yep.
We do,
Into our equity position.
every time we make a loan, there is a allocation for reserves that's made based on our historical loss rate. And then when a loan goes bad, we actually make an adjustment that's a specific reserve amount.
Or even if the company is not doing all that well, we think we don't have enough collateral, we'll put a reserve on. We're pretty conservative about our reserves. But we are strong, and, so we can afford to take some losses.
Sometimes banks, I haven't heard of it recently. Maybe they're still doing it, but they're for a while in the early '90s when the banks were really having a difficult time, as you recall.
Oh, yeah, that was the savings bank thing?
Yeah, and that's when Chittenden Bank, for instance, get down to like $4 a share. And I remember interviewing Barbara Snelling on that. And it was like, this is kind of low, isn't it? She goes, and she starts laughing. Yeah, I hope so. And and if you had invested then,
You'd been, oh, yeah.
you would have been really made out
Yeah.
well. And they were calling loans that were performing, non-performing, performing loans. And so they were calling loans like, because they thought, oh, we don't want this to get bad. We're going to take the asset. Well, it's still, and Oreo, if you're familiar, the Oreo portfolios are really high.
How could
And
they do that, though? How can you can't just,
I think they're just trying to mitigate the
you
potential
just can't
risk.
call a loan. I mean, it might have been a technical default
Yeah,
or something,
maybe.
I suppose.
Who knows what this is.
We could-
I'm over my skis here, but
Well, they could have found technical reasons in the loan that says, you're not meeting your ratios or something. Not that they
Yeah.
weren't paying or something, but
Yeah.
I guess they could have done that, yeah.
so, but you don't do. I mean, you. I'm going to guess that you really take these to the end of the line here and try and work them out
Oh, yeah.
and all that.
We don't have an Oreo portfolio.
Right now. We have.
We have, but,
Yeah.
But right
it's
now we
not in our-
don't. And we have a workout person who's been with us a really long time.
Yeah.
And he's really good at working with people.
Mm-hmm.
And you're right. Sometimes it's long, and Cassie and I look at each other and go, huh? But, if you work with them long enough, your loss rate really does get skinnied down.
I think did you mention what your loss rate is? It's very low, right?
It's about 1% in the large commercial
Okay.
loans.
What would a bank typically have? Do you know what their?
Yeah, they'd be, 25, 35 basis points, maybe, guessing.
Yeah.
So we're maybe double that.
So talk about.
Well, let me finish. In
Okay.
small business, we're over 2%, because it's, the small business program. If you look at those numbers, Tim, I think one of the things that's confusing is that the small business is commercial as well. So we do have 40% that's ag, but then we have, these are all, except for maybe this one, under the commercial. So ag isn't really quite 50% of our portfolio.
Okay.
Just,
Okay.
I don't want you to say the wrong thing.
So it's about 40%.
Yeah, it's about 40%, yeah.
So, do you have any other follow-up on this? Because I want to get telling me about some success stories that the people will be very familiar with. I mean, we've talked about a couple. We've talked about St. Albans. We've talked about the Brooks House. Putnam is still in process, but
One I love is Darn Tough Socks.
okay.
That's a great company that one of our lenders has worked with for years, and with their banking partner. And we've stayed with them, and they've stayed with us. There was a time when, the economy wasn't doing so well, but they have just really, really done a fantastic job. It's a great company. It wasn't always easy for them, but they've done it, and we're, I would say, pleased. It's the great thing about this, Tim, is you ride around the state and you say, oh, gosh, we were part of that. We were part of that. Oh yeah, and that's really an amazing thing to be able to do. The fact that I'm retiring and having had the privilege of doing that is just, it's been amazing.
We've been part of almost every brewery.
Yeah, that's true.
I don't know if you want to write that.
No, I think. I mean that the state is very interested in promoting the growth of that industry, and like with the dairy, it's become sort of branding. The part of the Vermont brand. I was listening to a radio show from New York City, and they were talking about Hetty Topper and people standing in lines for Hetty Topper, and just that sort of branding that goes along with.
It's kind of like the cheese.
Yeah.
The cheese where we really did a bang up job with that. And the other one that we financed the caves up at Jasper Hill.
Okay, yeah.
So
they just won another National Cheese Award the other day.
I have to tell you that when they first came and made their presentation to the board, they brought some of their cheddar, and the board was all like, "Oh my God, this is so good!" It was so delicious. And I think, that's part of it. That's your product. What's your product like? Is your product any good? And so that's something that I think we should be proud of having done that.
Yeah. It'll be interesting to see how the Vermont economy evolves around food. I'm just curious.
I know.
With,
How many breweries can we actually put up?
Well, you gotta wonder that. Yeah, I gotta wonder that. I keep making jokes about there going to be a lot of stainless steel on the market at some point, but
Do you look at that as well? It's like where are the industries going? Sort of like what. Sort of the last question is going to be where is Vita go from here? But just sticking with the businesses themselves, are you looking sort of like, oh, this is a trend that it seems going up or down? Does that factor into the?
of course,
Yeah.
In any underwriting decision, it would have to. For example, I don't know if you've heard about our broadband initiative.
I don't think I have. Yeah.
We're looking at doing that. It's in the legislature now.
Okay.
And it's very important, trying to get that last mile built. So we're going to be making loans to some of these companies. Program is small. It's only a total of about almost 11 million. So it's not a lot, but it's something, and hopefully we can help some of these smaller companies that are almost there get there. At the same time, it's very risky. It's a very risky
Are these sort of EC fiber type companies?
Yeah,
Sort of local?
that's what we see, yeah.
Yeah,
that,
and that's
or-
been very successful. I mean, I think it's been very successful.
Yeah.
It seems to be very successful.
Yeah, it does. It took them a long time to get there, though, Tim. You
Yeah.
know, I mean, and to their credit, they have been successful. But that's the thing, you know, they